It does take us to our talk of the tape. 2 months to go for stocks and a very big week ahead with the election and the Fed meeting looming large. Let's ask our panel what's really at stake. Stephanie Link of Hightower Advisors, Greg Branch of Branch Global Capital Advisors, and Ayako Yoshioka of Wealth Enhancement Group. Steph and Greg are CNBC contributors. It's good to have everybody with us. Nice to see you back here.
Good to be
with us, Mr. Branch. So what's your current view of the market?
So it's still neutral, and other than the election, I'm really searching for a catalyst to believe in, either negative or positive. Now, when we look at the election, of course, there's some de-risking here that goes on, no matter what the outcome is, with one candidate. On another level down, when you transition from candidate to elected official, we get to weed out some of the rhetoric and noise that was never going to make it into policy anyway. So I think that that's a de-risking event as well. And then thirdly, both of these candidates have been in office before. So we know what sectors and industries they've been supportive of and where we might see a very particular and specific tailwind.
So you've been willing to stay neutral, I think, for a while, right? In the slow lane, so to speak.
Right.
All this traffic's been passing you in the left lane.
It has.
And why have you refused to hit the pedal and join the rush? Because you've missed out, obviously, on a good amount of this rally, this bull market.
I think my answer is typified by some of the market activity we've seen over the last months. And that is, the data's still kind of mixed, Scott. So earnings growth for 5 straight quarters is great. However, this quarter is at 3.6% as opposed to last quarter's 13%. That bears some watching. On the inflation front, obviously we continue to experience disinflation, and it remains a topic that most don't want to talk about. However, the core number has shot back into the 30 basis points range for month-over-month core growth for the last two months now. So wherever I look, there's data that makes me optimistic, but still things that give me pause for thought. And I think I'll become more bullish when I find multiples and consensus expectations leaving room for outperformance. And I just don't see that right now.
Steph, what do you make of that?
Well, I think we should applaud 2.8% GDP growth because that's above trend, well above trend. I think the labor market, it's softening, but it's still on balance for the most part. If I look at ADP and initial jobless claims, if I look at the 3-month moving average for non-farm payrolls, you're at 140 versus 258 a year ago. So I understand that we are certainly slowing there. And that's the reason why we have a Fed that is embarking on a Fed cut cycle. We have lower inflation at an employment cost index at 0.8 this week, which was less than expected, a PCE at 2.1, and consumption, the consumer is hanging in there. To everyone's surprise, look at final sales to domestic purchases up 3.2%. That is a very healthy number. And of course, you have this manufacturing renaissance, and all you need to do is point to Eaton, Quanta Services, GE Vernova as examples of this renaissance, anything tied to the grid and power and electrification. And that, of course, is tied to AI. So I added up and I see total revenues at 5% and earnings right now on my numbers are up 9%. So I think that's very healthy. I think we have some volatility into next week. We've got a lot going on, but I think that once we get through it, I think we rally in November and December as people chase because they're underperforming and you've got $6.4 trillion in money markets.
Greg, earnings versus a year ago are up 8.4%. I'm not sure where your number
FactSet has
coming from, but
S&P only numbers at 3.6.
Here's what I think the bottom line is that the economy is undeniably good.
Yeah.
Right?
Great.
Okay. Well, because you said the data's mixed in total. It's not really mixed.
Let's stop there for a second, because I second a lot of what Stephanie said. Not only is GDP great, right? But the third quarter doubled. The second quarter doubled the first quarter number. The third quarter number is going to show acceleration as well. But to what extent is it too good is my concern when we see the core number jumping back into the 30 basis points. Look, I'm not the only one who is concerned that perhaps they moved too far too fast. Right?
And they did one hike of 50 basis points.
I gotcha. And here we are back in the 30 basis point core month over month again. So my bet is it'll be 25 for the next cut. And the concern will be, let's make sure that it doesn't accelerate from there.